Hey, well, welcome back. Doing a little bit more of our IPSAS training here. We were having a discussion about what was important and what the discussions that were going to be as part of an implementation with a client. So we're advising a company on the advice it's going to have to give to the government. And IPSAS 22 and 24 came up. So IPSAS 22 is disclosure of financial information about the general government sector, and IPSAS number 24 is presentation of budget information and financial statements. So you've got those two little standards there. IPSAS 24 has no analogy with an IFRS. Disclosure about the financial information on the general government sector does, and it's an interesting one. It's the standard, the IFRS, I'm sorry, I've forgotten the number, but it's the IFRS on segmental reporting. Right, for those of you who haven't watched any of these things before, my name is Fielding-Pritchard. I'm from Fielding, and we like to think, some of the foremost IPSAS consultants in the world. We've worked with 30 governments, I think we're up to now, on IPSAS. Right, so our little discussion is going to be about these two standards today. We'll start with IPSAS 24, which is general government sector, and then halfway through it'll switch to 24, which is presentation of budget information. You can contact me, much better to contact me through the website, so go to our website, which is mufielding.com, and then if you go on there, if you have any questions, you can send those questions to me. Okay, so we've got this standard. Now, start by reading the slide. As I said, this IPSAS number 22 maps very, very closely what is in IPSAS number 18, which is segmental reporting. And in fact, when I'm looking at this and we're talking about IPSAS that don't have IFRS equivalents, I would normally just include this as segmental reporting. The way that the standard is written, it seems to me quite clear that in fact what's happening is that they wanted you to do some form of segmental reporting, right? You being the government, so you have to say what the main sectors are. So we can look at this as geographical sectors, or we can look at it as industry sectors. So in terms of our segments, therefore, if you're a country somewhere like Russia, then you probably have oil and gas would be one segment, and then you might have other forms of stuff that comes out of the ground, so metal, and they have uranium, and they have iron, and so on and so forth. And then finally, you obviously have the industrial sector. Similarly, you can cut it in. You could cut it in terms of regions. So if you have countries like what Ukraine used to be, so Eastern Ukraine was the industrial center where there is coal and certain types of like mud stuff that they make ceramics with, then that would have been one sector. And then the Western Ukraine, which is much more agricultural, would have been different. So you could do it geographically as well. The phrases that I'm using are tying very much into segmental reporting, and what I'm saying and what you're hearing, therefore, is for people who are only used to IFRS, is segmental reporting. Now, what happens with IPSAS in real life is that when you go to the government and you have to go to each standard about what they'll be expected to do at the various levels of government and so on, is that usually people in ministries, and when I say people in ministries, you're really talking about the minister himself. So it's Minister of Finance, for example, who'll be your key guy here. What we've seen in real life is that the Ministry of Finance, or the Minister of Finance, will use this standard, and he will use it to produce reports. Right? When we say reports, if you think in terms of a quoted company, which is quoted on the New York Stock Exchange and London Stock Exchange, you will get, the managing director's strategic report. You'll get the finance director's report on what's happened with the money in the country, and then you might get others like the HR director. It'll depend on the business, but the HR director or the asset management director, depending on how important assets are in an electricity company, people, if it's PricewaterhouseCoopers or something, not that they're quoted. So again, what happens in real life is that when you're going through these things and you're dealing with the people in the ministries, they will treat IPSAS number 22 usually as driving them towards that. So in fact, we've certainly sat with the equivalent of speechwriters and written stuff that will go into interim reports for this. And ultimately went into the year-end results in certain countries. I have to find that generally they like it. The minister obviously will delegate the writing of the speech or the writing of the piece down to someone who is an intern or something like that. And then having done that, he will sign it and put a nice big picture of himself, sometimes with his family and stuff. I have to say in real life that's a nightmare. Getting the pictures done is by far the hardest part, and the part they will put the most effort into. So if you just go back and have a look at it, it gives you a list of information that has to be given out. The writing of the standard it very much drives you towards standard number 18 segmental reporting, towards the IFRS segmental standard reporting. The practice and the interpretation by governments that I've seen has been that this gives them the opportunity to add written reports into the IPSAS accounts. And so when you don't open it, and I have to say, I think the United Nations did this, you open it and you go straight to the income statement, the balance sheet, and so on. With this, you don't. And so the government will say, well, this is what we're trying to do. Tax revenues were higher or lower than we expected. This meant we could spend more or less. Much more of a thought of verbal information. And you'll see there it says that assist users to understand the resources allocated to support the delivery activities of the general government system. But the problem with that is that governments, even in small countries, are so big. You know, if you're preparing individual accounts for a bus department, then they can bring in some value for money indicators and so on. Very, very hard to do at the kind of national level when you're just looking at the government. So in fact, that last part is probably, again, a big part of the standard. It tells you what you're supposed to be doing, but it's not really the key part that people who are actually doing this in real life read. They're more interested in, let's look at this at the global kind of level. So this is just a continuation. The standard's very short, but the standard's fairly concise as well about what you're supposed to do, and it's quite an easy read, and it's a very, very short standard. So the disclosure of information about the general government sector does not replace the need to make disclosures about segments in accordance with IPSAS 18. To be quite honest, they're exactly the same. So if you're fulfilling 18, you're fulfilling 22 as well. I have to say that in real life it is a bit of a nuisance because it's a bit of a nuisance. It can be hard for the government because the government accounting system may not pick up the information as you require it. So therefore, when you're doing your implementation at that point, when you're designing your functional specifications for the IT system, you have to know what information it is you want. You can't design the IT system and then go, oh, look, it doesn't do what I want it to do, and then go back in and change at the end. That would be very time-consuming and very expensive. But other than that, it's very difficult. And of course, your definitions as well. What are agricultural products? If they're used for education, what if the Air Force grows wheat? Then is it an agricultural product, or is it something to do with defense and it offsets defense spending? Blah 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 blah. So you get all of these different problems of classifications and existence and so on. All the stuff that you see in all the other areas of IPSAS. Do you notice as well that it says public finance and public non-finance entities? So we get this idea of separating out finance entities. So organizations which are borrowing and lending money to the central bank, for example. But then also you have, in Great Britain, for example, the lending agencies. So the old SDA, the Scottish Development Agency, and then where I used to live in Edinburgh, there was Lothian and Edinburgh's Enterprise Limited. And these kind of pseudo banks that are owned by the government will come under different headings. If you want an example to see what that looks like, the best example is the Australian government. Disclosure listed as significant controlled entities that are included, right? That's a very broad face. What is significance? What is control? There are definitions within the different standards, but it's quite difficult. And then, of course, the part which is the hardest part, which is the reconciliation. What goes in the reconciliation? We talked before in early implementation phases as well that what governments will do is, I don't think there's any governments that actually have adopted IPSAS. They adopt government standards which are compliant to some degree with IPSAS, the degree being low if you're in America and almost complete if you're in New Zealand. It's often, therefore, that what they will do is that when they adopt their national standards, which are supposedly the same as IPSAS, what they will do is they will miss out the parts of this that are just too hard to do. And to some degree, IPSAS allows you to do that. If the cost is greater than the benefit of getting down to the penny, then you don't have to do this stuff. So there's just one real checklist that you have to comply with. The standard's very, very broad. So you can see the checklist there. So assets by major class showing separately investments in other sectors. So we'll obviously produce a list of those. Liabilities by major class, and then net assets and equity. Right, and that's just the stuff that we have to do here. So net revaluation increments and decrements. Decrements, is that a word? So revaluation increments and decrements. So what revaluations have you made? That would be your land and building. So you've revalued the things up to market values. And then when you've got your impairment, you'll see these things coming down. Other items of revenue and expenses which are recognized directly in net assets and equity. These kinds of things, particularly in the early years, will be more common than you might expect. remember we talked about you're going to have an IPSAS adjustment account. So the question is, what are you going to do? What's your accounting policy with that IPSAS adjustment account? My preferred approach as a professional is to write it off, get rid of it over some pre-agreed period of time. So we have an IPSAS adjustment account. Let's just get rid of it over 10 years and take it directly to retained surplus or deficit. You know, when I worked at the UN, I was overruled. I was overruled by my team, and they just left it there. And UN policy was just to leave it there. So in 10 years' time, you're going to have an IPSAS adjustment account. If that thing goes up or down, you make any prior year adjustments or anything to it, then you have to disclose those. Yeah? Surplus or deficit for the period, and then finding cash flows from major operating activities by major class. That's an interesting one that it doesn't show any financing there. Any financing probably won't have any tax in most countries. But if you borrow, if the government's borrowed any money, got interest payments, nothing there. So cash flows from operating activities by major class. So that gives you this idea of IPSAS 22. Right, when you actually go and you actually read the document itself, you will see that it's divided up into areas, all of which I have to say are going to be fairly clear for you. I've actually just opened up the document in front of me, so if I can just get to the top of it. My mouse isn't going to take me up very fast. So the reason for issuing statistical basis, and then this is really what we're looking at. It's supposed to be the ways in which we have funded our various activities. So it says here governments raise funds from taxes, transfers, and a range of non-market and market activities. The reality of this thing, the reality of this in real life, obviously, is that governments will write an essay. So they'll write an essay on what's been happening. It does tie back into segmental reporting, and we talk here. There are certain things here about statistical bases and then accounting policies, which of course are contained in number 3, IPSAS number 3. And so it goes on. The general government sector is defined in the SNA 1993 as consisting of all resident, central, state and local government units, and it goes on. I don't know what more to say to you about that. It seems to be a standard which has very great differences from country to country in interpretation and application. It's also a standard that some countries have missed out. I come back to this thing where I've seen it now in about 3 different countries where we've actually worked with the government. They've adopted this standard, a national equivalent of this standard, and they've used it to give an overview of the country. And they've simply, on adoption, missed out the sections in the IPSAS that require them to provide numbers, the assets, the reconciliations, and so on. Okay, that's IPSAS number 22. This is very, very strange for me to do, but if you are going to have to be working with this, I actually recommend you just get the standard out and read it. It's very easy to read, it's very short, it'll take you all of 10 minutes. What isn't there is the flavour of what people will do with it in real life, and you'll see when you read it that it's very, very open to interpretation. Okay, that was IPSAS number 22. I guess I should look at the next slide in case it's come on again, but I think that's the last one from memory. Right, when we looked at IPSAS 22, you probably got the impression that it was kind of a little bit wishy-washy, and if you're a student for an exam, I imagine you'd be looking at this going, give us the meat and bones of this, Mark. Tell us what we absolutely need to know to write in the exam, sort of thing, because I do a lot of exam training. And it's very difficult because IPSAS 22 is this very kind of broad brush, wishy-washy standard, and I try to bring that to you, what people actually do to get around that in real life and to get some practical meat out of the thing. Right, IPSAS 24 is completely different. IPSAS 24 is the opposite. What it's telling you is what do we have to present from the budget. Now, when we're talking about the budget here, we're talking about the state budget. In almost every country in the world, I think certainly every country I've worked in, the budget is the key document. Because if you just take the sort of principles of democracy, we vote a government into power, and we vote them into power on certain promises that they make, those policies that they say they'll put into place, and then the budget is this big amalgam of this what they're going to do to implement those policies. So what's the financial plan? Where's the money coming from and going to that will allow them to implement those policies, which we gave them the right to do by our vote. So if you want to turn it into a sort of a law, theory of law lecture, we allow these people to do certain things in our country, and this is what they're going to do. Right. The reason for that, therefore, is that in terms of international law, the prime document that the government has, as far as finances are concerned at least, is the budget itself. And so you've always got to remember that. We talked about way back in these implementation videos about this idea that you have the budget, you have the treasury, and you have the accounting. The budget is, if you like, looking forward. So if it's 2016, it's what we prepare in 2015. Treasury then actually measures the cash coming in and going out. Cash coming in and cash going out compared to that budget, and then the accounting records, you come in at the end and you prepare a record of what's actually happened compared to what you expected to happen. And what's actually happened is, in some countries, is almost exactly the same every year as what you expected to happen. Certainly worked in countries where budget differences are a maximum of 1%. So what IPSAS 24 asks you to do, therefore, is it asks you to say, right, this is the budget. This is what we plan to do, and then your accounting records, this is what we actually did, and then there'll be a reconciliation in between. So to put it simply, in terms of sort of management accounting, this is the country that we have, we're managing it. The budget was the budget, the accounts is the actual, and those two things have to now be reconciled together. That in real life is an utter nightmare. It's an utter nightmare for numerous reasons that we're going to come on to. But the obvious one to begin with, and we'll come on to this, but is that the budget is almost always prepared on a cash basis and your accounts are on an accruals basis. So what do you match depreciation to? Right, there is no IFRS, so let's just have a look at this. So it says here no IAS equivalent or no IFRS equivalent due to differences in public versus private sector accountability requirements, and that's the driving force for this. You're required to present budget and outturn financial information. So outturn financial information is the result. Yeah? Publicly available, that doesn't always happen. And there has to be an explanation of the material differences. So what are the differences between the two? And obviously you have to prepare that in such a way that non-accountants understand it. That's your background then. You've got your budget information, which comes from your budget. Which is probably on a cash basis, and then you've got your accounts, which will be on your accruals basis after the year end, and you have to explain the major differences between the two. Simples. Okay. Awful in real life. So the words of the standard are actually fairly straightforward and fairly short. It's the practice that's really difficult. So it says that all public sector organisations should apply if they if they publish budget information. Right, in many countries they won't, in the individual ministries won't, and in fact in many countries even the government doesn't produce its budget. But everybody should, and this is what we're trying to get to. We're trying to get transparency in the budget process as well as transparency in the accounting process. So it focuses on the income and expenditure budget only. Thank God, others are trying to explain why your liabilities are less or more than they should be. Right, there's a need to show your budget versus your outturn. So you're showing your budget versus your result, yeah? And notice therefore that it's shown as a single statement. Right? Most governments will not produce, they might produce the budget as a single statement, but even in countries I see with 10 million people, it's going to come to 50 or 60 pages. And what the IPSAS envisages is that you condense this somehow, so you concertina it, so you're going to get it on sort of 1 or 2 pages. Because once it's more than 1 or 2 pages, people don't read the damn thing anyway. And so here we go. So you can show as either a single separate statement, as an additional column in the financial statements. And then it says here, you may need a statement of budget versus actual amounts. You may, particularly because what these things do is they ask you to explain any material differences. And the differences between cash accounting and accrual accounting are material by their very nature. So let's just leave that slide there, which is what, slide number 6. This is what the standard says. You're going to show this budget as a single statement or a column next to the financial statement. You're only looking at the income and expenditure account. And it says you might need, in reality you certainly will need, a reconciliation between the two. So this is where the fun starts. I think I've pinched this slide from another presentation, but this is one of the main differences. The first thing is which budget. In some countries, you will find that they will prepare a budget. The budget will be ready somewhere around about the 31st, or certainly before the 31st of December, and then that budget becomes the budget, and it doesn't really change in any way. And that's it. Other countries will prepare budgets, and then they will have planned changes. So your budget has to be ready by the 31st of December, and then there will be revisions often at 30th of June and 30th of September. So if you basically you're going to get 3 different budgets. So the question is, which budget do you use? Well, the standard does actually address that. It says the original and the final budget. So presumably you're just going to do the reconciliation from actual to final budget. In other countries, what they do is they do the budget, but they make the changes unofficially, so it doesn't have to go through law. So I discovered this when I was working in Nigeria. They will budget, let's assume, 1.5 million to spend on the place where they register birth, deaths, and marriages. And then halfway through the year, they'll find they've got a deficit because the price of oil has gone down, so they just don't pay the money. Now, in that case, you have to ask, I suppose, therefore, your major reconciling item will be the fact that they haven't paid the money across. Very few governments will want to show that, so therefore what they will probably do, I imagine, is that they will actually just update the budget itself. But the point there is, which budget do we actually use? In reality, I think my logic tells me that you're supposed to use the final budget, but the standard says you have to use other interim budgets as well. Some countries have budgeting systems where they just simply change the budget by ministerial decree. So the minister wants to cut the budget for whatever, for staff. Some people leave, he doesn't want new people hired, so he just writes a letter and tells them not to do it. How you collect those things together and how you put them into your accounts, I have absolutely no idea. And it's these kind of things that make this so very, very difficult. Then it says the need to explain the difference between actuals and budgets. And this is going to be horrendously difficult. Almost every country in the world outside of Europe has a cash budgeting system. So therefore you're going to have to explain the difference. Your starting point will be the difference between your cash and your budget. And then going on and making other changes as well will be very, very difficult. This is a really, really difficult standard in real life. Okay, so we touched on some of the issues on the last slide, which, as I said, I think I've pinched them somewhere else. But I've put all the stuff together on one slide here. So difficulties arise, right? The difficulties therefore mean what the hell do you do in real life? Right, the first one is budget changes, and we kind of touched on that. You have to remember that what's happening here is that your budget is written, and then the fact that you're going to spend exactly what's in your budget almost never happens. So how do we change that budget? In some countries, there will be an organized process of change. In other countries, it's just the guy will just make a change, and certain people with approval can make changes in the computer system. And in others, they don't make any changes at all. They just don't pay the money across. So the changes will only ever be downwards, and when they're downwards, they just don't pay the money. So a certain department doesn't receive its money. How are you going to reflect that? Or what are you going to show as the budget sum of money? Right, I have no idea. You have to have a policy on it. But it's important to get these things planned up front. And once again, of course, you always have to remember that what happens in real life and what it says in the rule book are often two very, very different things. Number 2, budget categories do not match accounting categories. The budget categories will be written into law because your budget is your important document here. Sad to say for us accountants, but the financial accounts we prepare under our wonderful IPSAS are nowhere near as important in the eyes of the law in almost every country as the budget itself is. So your budget categories, therefore, you might just have purchase of assets, and that's it. Now, you don't know whether they're short-term assets, whether they're long-term assets, whether they're buildings, whether they're land or whatever. So when you are designing your accounting system at the very start, what we call the chart of accounts, you have to make sure that your chart of accounts is matchable to those things, as well as to your government statistics that the World Bank requires. So if they're not, and no one ever remembers this in real life, and even if you start saying to the team, remember at the start, they go, yeah, and then of course it takes so long to do, no one does it. So if they're not done properly, it just isn't possible. You won't get an equal comparison, because you won't know what's in the budget compared to what's in the accounts. Budget is on the cash basis. This is almost certainly true, and so therefore, You've got big expenses for depreciation and so on, and there's no depreciation in these things. You have to do all the reversals of all the entries that you put through at the start of the year. So on what basis, therefore, do we show the difference? What expenses have we got in our IPSAS accounts? They have to come out. And so, again, with good planning in your IT system, it shouldn't be too difficult. It's just a case of catching all of these things and making sure the system understands what they are and where they are. Budgets may not be prepared for 1 year. This happens in some countries. I think most countries do 1 year now. Certainly in the good old days, the Soviet Union, it was 5 years and so on. But again, your problem as well is that, I guess, with your budget is that what's going to happen to it is, let's assume you budget to build a road between Edinburgh and Inverness. It's possible that that's a 5-year project. So what do? We just show the budget which is in this year, or what part of that budget do you show? Budgets may recognise an expense at the requisition stage. Right? This is back to procurement again. It very, very often happens. You know how did we get this idea? And it happens in public and in private. At the end of the year, you haven't used your budget up, so you've got to use it up. Use it or lose it. The old idea that we have. So at what point does the budget actually recognise an expense? And so does that mean we have to change our financial statements to go back and trying to explain to users of accounts what purchase orders raised but not processed and not delivered yet are? I mean, it's an absolute nightmare. The budget rollover process may not match the accounting, so therefore, right, well, if you have budgets where items are carried forward, you may find in certain budget systems that where you have multi-year expenses, and we're building a foundation for a building and the building saying it's stopped being built for a year while we wait for the money to come in and go on. These things are simply not rolled forward. So you may find, therefore, that, particularly if you've got a project which is then going to stop for a year, for example, you're going to have expenses in the next year on the accruals basis, which for the budget are in this year, and then there's nothing in the next year. So your budget rollover process is that, therefore, when you have multi-year budgets, for example, how do we roll over the balance unspent? Right, that may not match the accounting. The accounting may be completely different. Particularly where you've got things like non-exchange revenue. So you've recognised all of your revenue up front, but in your budget process, you're actually going to spread it for 5 years. And we can get situations like that as well. And the final one is that the government may not want to disclose in the budget or in the accounts certain items which it just feels it shouldn't disclose. Anything to do with the police and the military. For some strange reason, I've tended to find that the expenditure on the military, they don't have such a big problem with, but expenditure on the police, they do. And one other particularly cagey category is military assets held abroad as well. Governments do not want to disclose their military assets held abroad. I should have turned the camera off then, shouldn't I? So our final slide here then is the disclosure items in IPSAS 24. And remember, IPSAS 24 once again is a very, very short standard. Unlike IPSAS 22, IPSAS 22 is a short standard and there's not really that much in there. And many governments try to ignore it without really too much of an effect. IPSAS 24 is a short standard, but in terms of the work involved with implementation, it's a big, big chunk of work. And many governments just simply miss this out. So in IPSAS 24, you are therefore asked to disclose, and there's three or four big items therefore. Explanation of the budgetary basis and classification basis in the approved budget. I mean, it sounds easy, doesn't it? But oh my God, that's enormous in real life. Imagine trying to explain the whole budgeting system for an entire country if you're in Britain or Russia or America or somewhere. Notes should state the period of the approved budget. That's not too big, and it's usually it's 1 year. Though some governments now have got rolling budgets in some departments. And the note should give details of the entities included. So what's included and what's not included. And once again, it's just the material one. Finally, disclosure of comparative prior year information for budgets is not required. So self-explanatory. No prior year information. Right, there you go. You've got two standards which I have to say that when I've seen the timetables of organisations that teach IPSAS, and those organisations have very varying amounts of practical experience of doing this in real life. IPSAS 22 and 24 don't generally get a lot of airtime. With IPSAS number 22, that's probably fair enough. So, as I said, what you should expect to see in real life is that the finance minister and maybe even the prime minister, but certainly other people in key areas will use it to write little reports on what that's happened in their area. Think of it as, you know, the managing director talking about strategy, the finance director talking about finance, and so on. In terms of the reports and additions that you get to a set of financial statements under IFRS. The second one is IPSAS number 24. Many countries just sadly miss this out because it's so difficult to do in real life. Really, really hard. And if you are going to be doing a presentation, if you are going to be doing, an implementation, then you really, really have to be used to this. Okay, if you have any questions on standard 22 and 24, please don't hesitate to contact us. You know where we are. And best thing to do is come to the website, like us on Facebook and all that stuff as well. Thanks very much.